Hi and welcome to the channel. Are you a homeowner with a mortgage? If so, then there's a very good chance you are concerned about interest rates right now. They are the highest they've been for an entire generation, with no signs of them coming down significantly anytime soon. In fact, the last time interest rates were this high is back in 2008, around the time of the global banking crisis. So as a concerned homeowner, there's a good chance you may have heard of the mortgage relief measures announced by the Chancellor Jeremy Hunt.
Tackling high inflation is the Prime Minister and my number one priority. We are absolutely committed to supporting the Bank of England, to doing what it takes. We know the pressure that families are feeling, but we will do what it takes because we know that getting rid of high inflation for our economy is the only way that we can ultimately relieve pressure on family finances and on businesses.
Just to clarify, the measures include allowing mortgage holders to extend the term of their mortgage with no impact to credit ratings, and should a homeowner default on their mortgage, repossession proceedings cannot commence for the first 12 months. That does sound great on face value. However, as with a lot of government policies, there are often two sides to the tale, and there are certainly consequences of the measures that must be considered carefully before anyone signs up for assistance. With the recent increase in mortgage rates, many homeowners are finding their cost of their mortgages entirely unaffordable. Many have or are about to come off low fixed rate deals and be exposed to considerably higher interest rates. Some homeowners are finding their monthly payments doubling overnight. This is clearly entirely unaffordable, especially when we are already feeling more financially stretched than ever before in all other areas of life. The mortgage relief measures are designed to allow homeowners to extend the term of their mortgages for 5, 10, maybe 15 years in order to limit the increase in the cost of their monthly payments due to the interest rate hike. By repaying the loan over a longer period, a homeowner can pay less each month. The measures also allow homeowners to extend without it affecting their credit rating. The measures also provide struggling homeowners with that 12-month grace period before any repossession proceedings can commence. The hope is that over the 12-month period, circumstances within the economy may improve, inflation may reduce, leading to lower interest rates and an ability for homeowners to get back on top of their mortgage payments. So let's explore these pros and cons of extending the term of your original 25-year repayment mortgage after 15 years for an additional 10 years and see how these government initiatives can have an impact. Let's do some maths and let's use some very typical numbers for average UK mortgages. Imagine someone with a £250,000 mortgage at a 5% interest rate over the term of that mortgage. But you only have 10 years left on the original term. Your remaining balance after 15 years would be approximately £140,000. Now let's analyse what happens if you decide to extend the term for an additional 10 years at a 6% interest rate for the term of the mortgage, for the term of the extension. By extending the term for the additional 10 years, you'll be able to lower your monthly payments, which can provide some immediate financial relief. However, it's important to consider the long-term implications of doing that. Let's crunch the numbers and see the impact on the overall interest paid. Over the original 25-year term, you would have paid a total of approximately £110,000 in interest. But if you choose to extend for an additional 10 years, at let's say 6%, you'd end up paying a total of approximately £151,000 in interest. That's an additional £41,500 in interest paid by extending the term. While it might reduce your monthly payments in the short term, it's crucial to understand the long-term cost. You'll be paying more interest over a more extended period. And of course, the effects of extending are even more dramatic if you are borrowing larger amounts. Taking up the mortgage relief assistance, like taking on any debt, should be a carefully considered decision. It may be a last resort and actually the most cost-effective way to get to grips with immediate financial struggles. After all, mortgage interest at 6% may be the most cost-effective and secure option of borrowing available to someone. So to quickly summarise, extending your mortgage term on one hand can provide immediate financial relief by lowering your monthly payments, allowing you to manage your cash flow better and effectively not actually experience any particular change to your standard of living. Making informed decisions about your mortgage is crucial to your financial well-being. Consider all the pros and cons, assess your long-term goals. Never bury your head in the sand and seek professional advice before anything comes along to challenge you. A home is an important asset, and managing a mortgage responsibly can set anyone on a path to long-term financial security.